Hackers drained $1.4 billion in Ethereum and Ethereum-related tokens. North Korean hacker group took credit for it. They put it in 54 wallets. And the thing about Bitcoin, Bitcoin crypto, and even Ethereum is that it's what's called immutable. Immutable means that that's one of the ethos of cryptocurrencies: transparency, immutability, and decentralization. So those are the three ethos of blockchain technology, right? Is that we want it to be immutable, which means you can't get it back. You can't change what's already been done. Transparent, you can go online and see all the transactions. That makes sure everybody's on an equal playing field. That makes sure everybody's honest. And three, decentralization. And no one person can control it, have an unequal control of the blockchain and the blockchain technology. So immutability is one that's real important for blockchain enthusiasts, blockchain believers. And now the Ethereum piece, this is what gets me mad with people, is that it's all good and everybody's okay with all the ethos and the standards till something happens. Now they want to pull it back. People say, well, we should take back the hackers' money. We should reverse the blockchain, go back to 2 weeks ago, take the dude's money and then restart it. And a lot of people who lost their money really believe that because they lost a lot of money. But is that the right thing to do? Because anybody, and that's how humans are, is that everybody's okay and strong and have morals and ethos. If something affects them, then all of a sudden, no, throw all that out the window. Just throw it out because I'm affected. No, that's not how things are supposed to work. You're affected. Everything, you're supposed to believe what you believe no matter what. And I know that a lot of people lost money. I know that companies lost money, but I think rolling back the blockchain is a bad sign. It takes a lot of work for one. It'd be the second time. Ethereum actually did this in the past once before, in 2016, 15, 16, when a DAO got hacked. It was the biggest hack it was the biggest Ethereum hack in history up until now. And then Ethereum rolled back, and what happened is that it created two blockchains. It created Ethereum Classic, which refused to roll back. Because remember, whenever you do a rollback, what it means is that when you send the software, like all the miners or all the nodes in your network, they have software on their machines. And they also have a copy of the entire blockchain. So every single node actually is independently the entire blockchain. They could restart the blockchain because everybody has a copy of it. Everybody is equal in the system. That's what decentralization is. So in order for you to change something, everybody has to agree. It gets consensus. So if everybody don't agree, let's have people say, nah, we're not gonna roll back. And other half people say, yeah, we're gonna roll back. So now you got two different chains. People that stuck with the old code and the old data, and the people that went with the new data. That's why we have Ethereum Classic. That's why we have a regular Ethereum now. So if they do roll it back, we're gonna have another Ethereum. And I have three different Ethereums because all the, like we saw in the past before, all the nodes are not going to agree to do that. They're going to create a third chain. So, but the good news is that if you have coins in this chain and they double it, now you got two different chain coins. That's what happened with Ethereum Classic. A lot of people made a lot of money because when Ethereum split, now you got funds on this wallet, the main Ethereum, and you also got funds on the Ethereum Classic chain. So a lot of people made a lot of extra windfall money because of that. So that's another reason why a lot of people are going to be like, yeah, let's do it, because they want that extra funds. So, but that still is not good, I believe, long-term for cryptocurrency or the ethos of the three pillars of blockchain technology. Markets are still down this morning because of tariffs, because of a lot of fears of inflation, and also fear of the economy not doing so well under those same very tariffs. So we're going to talk a little bit about where XRP is going. XRP is still consolidating right now, right? It's a lot of sideways actions before I believe that we're going to have a breakout here soon. It's been consolidating between 285, 230, waiting for a catalyst to break out. Now that catalyst is possibly going to be XRP's addition to a strategic reserve or a sovereign wealth plan, or it could be the resolution of the lawsuit. So XRP right now is just waiting for that catalyst to break out. There's a lot of consolidation going on. The SEC has acknowledged in multiple XRP ETF filings. Price action is still remaining tightly in that range. That right now there's crucial resistance at 275, 280. A strong close above 275 will signal a continuation of this uptrend that we're in. There's an ascending triangle pattern right now forming on the 12-hour chart. It's a bullish pattern. It shows us that the market is waiting for some type of catalyst once again to break out of that ascending triangle. So XRP is still very strong. A lot of the market sentiment and fundamentals are strong. Like you said, SEC is recognizing those XRP ETF filings. It's a long-term bullish signal. If Bitcoin and the broader crypto market remain strong, XRP will see great momentum going forward. So XRP has a lot of positive news. The market is still a little bit depressed. So that news is not translating into upward movements for XRP. But there's a lot of technical strength. There's a setup, and it remains promising for everybody who are believers and investors in XRP. So I want to talk a little bit about this Ethereum surge as Bybit tries to buy back the Ethereum that was stolen by the North Korean hackers. Yeah, so the whole market's down, and that's because of inflation worries, tariff worries. A lot of different people are very scared. Now, Nvidia, and a lot of people believe that Nvidia is going to report lackluster earnings. So if that does happen, yeah, the whole market's going down because Nvidia was one of the main drivers of everything up until now. Remember, and also crypto is attached to the stock market. It shouldn't be, but it is. And that's what I always talk about market cap. That's why I always talk about technical analysis. I've been in cryptocurrency since 2011. You know, and when I started cryptocurrency, I was a grad student at University of South Florida here in town. I was studying cryptography. A lot of people don't realize this, but cryptography existed well before cryptocurrency. And then people always say when I tell them that, how was you studying it before it became a thing? Because this is something that existed for 100 years. Cryptography existed before computers. They used cryptography in World War II. The ENIAC, I believe the ENIAC machine, to encrypt messages that were sent from the United States to British to win the war against Germany. This stuff has existed well before cryptocurrency. Cryptocurrency just used the technology, and I made a currency off of it. The people always say crypto doesn't mean it's not. This is not cryptocurrency. Is a bunch of old technologies put into a new way. That's peer-to-peer cryptography and based on the internet. You know, all of these things are 20, 30, 40-year-old technologies 50-year-old technologies that crypto just reassembled in a new way, which is still new, but it's not the technology that underwrites all of that is an old technology. So studying cryptography over there, but when we first got into crypto, it was all techies into crypto. People like me, nerds, geeks. And we were just happy to have something that we could play with. I didn't even see it as an investment at first. It took me a while to see it as a real investment. So around 2015, 16, all these stock market people came in. I was like 17, 18 stock market people came in. And they started putting technical analysis on crypto. Now, the thing about technical analysis is it works. The reason why technical analysis works, that's called reading the charts, is because everybody else reads the charts. So if everybody's thinking that it's going to do something, they're making plays based on how it's going to react, the market starts reflecting what all those people are doing. So now the market does work with technical analysis. The market cap does look like it has some effect on cryptocurrency because all of these people who came into cryptocurrency, 17, 18, they made it that way. But cryptocurrency one day will break free from that. But during this midpoint, it is attached to the stock market. Let me see the questions. Do you have any info about Shiba? Yeah, Shiba's actually, I didn't have this plan to talk about, but Shiba has experienced over the last few weeks a massive inflow of new interest and new investment, causing the price to respond, but also causing the volume to go up tremendously. So a lot of people see that as a positive sign of Shiba possibly having a breakout here coming soon. Now, I don't like meme coins. I've made that clear. Shiba is technically a meme coin, but a meme coin is only a meme coin because it has no utility, or it has no promise, or it has no use case. But Shiba and Floki are meme coins that are trying to convert themselves into utility, trying to convert themselves into something with a use case. Now, in those particular cases, yeah, I will say that I like Shiba and I like Floki because they're trying to convert or go away from that meme coin. A lot of times technology starts a certain way and it evolves into something else. Twitter, people don't realize this, when Twitter was started, the reason why Twitter was started, one of the reasons is that back in the early days of text messaging, there was no such thing as a group text. So how would you text a bunch of people? Well, Twitter. If you remember in the early days of Twitter, I should have got on there earlier, but I hated social media. I thought it was stupid. Uh, Ironically, right? Because I'm on it now. But back when Twitter came out, I thought social media was all stupid. I was like, I don't. Everybody's just showing off on there and stuff like that. So Palantir is probably going to drop down short term. A lot of analysts said there's a 62% downside on Palantir. Palantir's valuation is 255 times earnings, even though they have strong growth. Uh, they have strong customer growth at 43%. Sorry, revenue increased 36% last quarter. But some people are saying that Palantir's AI platform is not as strong as other competitors. Um, so Palantir probably will go down in the short term. Now it could still go up. Maybe I'm wrong. I'm not wrong often, but I'm wrong sometimes. Uh, but everybody's wrong. The key is to be more right than wrong. So Palantir, to me, it looks like a risk to invest in Palantir now because it's already done most of its growth. So even if you invested now, and let's say it went up another 20%, then retracted, it's a high risk that when anybody gets in from here over the next like 3-4 months is going to end up on the downside pretty quickly. Because even if the AI bubble does not burst in the next 6 months or the year, it's going to burst next year. So if we get to let's say Palantir gets to 130, does a 60% retraction down to 50, 60,000, $50, $60, you're still lost half your money. And you have to hold it for another 2-3 years before you get your money back, maybe 2 years. So what that causes is an opportunity cost, right? Is that because the money is now locked in Palantir, you can't sell. You can sell, but you probably won't. You cannot use that money for other opportunities. So now you're taking on the opportunity cost. That's when you could have used the money for something else during that time period. So at this point, Palantir looks like too much risk for me. I have Palantir. I haven't sold any of mine. I'm not adding to my position, but I'm also not selling any. So that's where I'm at with Palantir. And I just think that there's too much of a risk of an AI bubble, or what people think there's going to be an AI bubble, and it could still cause one. Somebody said, look at the ISO 022. So with those is that they have pushed it back to July. And that's not a bad sign. They do it all the time with technology. It could just be that things weren't ready. It doesn't mean every time there's a pushback or a change, it doesn't always mean anything negative. It could be positive. So that pushback is nothing to be worried about. Now it's going to cause people to panic or pull back on some of those coins, tokens, and projects, or even technologies. But I don't think it's a bad sign that they push that back. I think it's actually a positive sign. So if the stock market falls, cryptocurrency is going to fall as well. So if the quantum computers come out, they're supposedly supposed to be able to hack crypto wallets. A crypto wallet, all it is a text file, more or less. It can be a text file. It's a private key and a public key. The private key allows you access. The public key is something you send out to people to get deposits, more or less, get crypto sent to you. So to access it, all you need to do is figure out what the public key is. Now, the public key is a long string of alphanumeric characters. It's very difficult to just guess it with a regular computer. It takes billions of years. But with a quantum computer that's not limited as much by time, you can guess it a lot faster. So it does put crypto at risk. Somebody says, what can we do not to get hacked when the chip comes out? That's a good question, because when the chip does come out, you won't get hacked because the blockchains itself will update themselves. Because technology, it's just not going to just, one day we're going to have quantum computers. They're going to come up with defenses against quantum computers. So I want to talk a little bit about this AI bubble. Nvidia has earnings on Wednesday. A lot of people believe that that's going to be the end of the AI cycle. And the thing about it is, I'm not sure if it will be. It could be, could not be. I don't know. And when I don't know, I pull back, and I'm not sure that. Now, I was short Nvidia. Like the last 3 earnings, I told you, yeah, they're going to blow out earnings. And they blew it out every time. This time, I'm not so sure. They could blow out earnings. They could do well with earnings, but I'm not sure no more. So I don't make those kind of plays. I pull back and to see what's going to happen. I think they're going to just meet expectations, but that's not good either. That means the market's going to crash because it's going to look like their growth is slowing down. So it's going to affect Palantir, SoundHound. SoundHound would be the best opportunity in all of that, because SoundHound, SoundHound shouldn't be caught up in any bubbles because it's still at an early stage. If it is caught up, and if SoundHound drops like $8, 8 something, that's a great buying opportunity for me. So with that being said, I hope you guys have a great day. I appreciate you.